Hold on.
Yeah.
Stop talking.
Yeah.
Oh, is it recording? Are we recording? All right, go again. Miners don't care about what? Hi, Steve Barbour, by the way.
Hi, Peter McCormack. Well, thanks for having me. But miners, at least I care about hash price. Like that's like our oil price. Bitcoin price could be $1 million. We could still be poor as miners, though, right? If difficulty is proportionally high and like fees are low and stuff. So miners care about hash price. It's the only thing that matters, which is funny because like a lot of mining public companies don't really trade on hash price. Like the market prices them on Bitcoin price. You'll see the Bitcoin price pump and the mining stocks will pump, even though hash price might be at like,
So what, hash price is like your price for a barrel of oil?
Yeah. It's like the commodity price. Like we're computing, so we're hashing. So the value of the hash is actually what matters to us. So obviously that's a function of block reward, like fees and subsidy.
What is the hash price right now?
I'll pull up a chart. It's getting crushed though.
I think it peaked like last week because, fees have been spiking and then price pumped. So it went up to like $90 per petahash per day. But it's down to like Luxor or Hash Rate Index posts a really good website. Yeah, you got it up. Yeah. So
it has been trending up.
Yeah. So if you zoom out, go to like a 5-year trend. So, like it's not so much like obviously you see in the bull markets, especially 2021 to 2022 and a half there. I mean, that's why mining was so frothy. But we're sort of at this like, it almost seems to me like the commodity price, and it's a function of a few things. Like it's a function of the computer efficiency. As more efficient computers come on the market, the dollar per hash will keep trending down because effectively the efficiency to compute, like the wattage, gets better and better. But I mean, like, so the funny thing is like whenever Bitcoin Twitter, like you were just saying, Danny, like you're very, very bullish. I'm also very bullish, but I'm bullish compared to my normal state of mind, I'll say. But the hash price actually is the only thing that matters in my business. It's the thing that you forecast. It's the thing that all of our customers, everyone who mines Bitcoin, truly cares about.
That's how much you're getting paid per petahash that you...
Per compute, per petahash. Hash price index does it. They compute hash price by your revenue per petahash per second. I think, they have a terahash per second option, but more or less, you can just take it's a nice metric because you could just take a fleet of mining machines. Say you have a petahash of mining machines, like 1 petahash per second. Maybe you have like 10 Watts Miner M30s or something. Well, this will tell you exactly what you'll earn right now. So like it's currently at, I don't know, $75 per petahash.
Do you kind of want to know your daily rate rather than per second?
Yeah. This will give you the total per day because they have it dollars per petahash per day.
Yeah.
So like this will earn you $77 per petahash per day. And
so therefore you know how many petahash you're producing.
Yeah. So if I'm computing at say 1 exahash, that's 1,000 petahashes. So I'll make $77,000 a day based on today's hash price.
And then as somebody who isn't a miner, if I had my every business I have a various spreadsheets that help me understand my business. I'd want to know my cost per petahash.
Yeah, so this is your gross revenue per petahash, and then your cost is going to be a function of the main cost driver, of course, is energy, right?
But do you calculate it as a cost per petahash?
More and more you are seeing some of the analysts sort of put that out there, like cost per compute, but they're usually putting cost per Bitcoin. Like Jared Mellerud, Luxor has some good guys on staff that write really nice mining reports, and Compass Mining does as well. So they'll put out like reviews of all the different mining pubcos, like how they're performing, but they're often like showing cost per Bitcoin. But I've always argued that's not really a great metric because the better metric, I always compare it to oil and gas because I'm an oil and gas guy, is like our commodity price is hash price, just like in oil and gas, it's oil price. And in oil and gas, we'll talk dollars per barrel of oil produced equivalent, like lifting costs or whatnot. So I think the market should switch. Like eventually, I think they will switch to the metric will be like cost per hash, not so much cost per Bitcoin, because that's a better metric for performance.
Well, that would give you a gross margin.
Yeah, it'll be your gross margin, and then of course you'll have your operating overheads and stuff. like your actual physical unit cost to operate that load center or data center, as the legacy people say. But and then of course you have overheads like management and all the normal business overheads.
Can you bring up the 5-year chart again, Danny?
Yeah.
So it's been pumping, right? Like it like when it's at $60 per petahash per day, which is when you look at the very long-term trend, it seems to go down to this level, and it doesn't go much below that, because once it hits below that, a lot of miners can't afford to mine, right? So they shut off. And so the difficulty
That's the
drops.
baseline.
Yeah. So like when I forecast, I'm always forecasting hash price, and my assumptions are based on, okay, well, maybe there's new efficiency gear coming to market, but generally you're also seeing energy price inflation, right? The cost of energy has gone up. So I'm at $60 per petahash. I'm reasonably comfortable that that's a reasonable average level of compute for the next few years. But it's like anything. I don't have a crystal ball, right? So I just assume, and I might have a worst case scenario like $50 or $40 per petahash, and so my business decisions have to be based. I'm always basing them on, like I think any practical business, like the downside. Like what's the downside in the future? Can I build a business towards that? If I can, then everything upside is just gravy, right? So
Right. Okay. But you might not even want to answer this, but do you make money at $60 per petahash?
So the answer is yes. My company, though, we're more of an infrastructure company. We make money, yes, because we sell equipment.
Right.
So I'm building people Bitcoin mines from at all scales. That's what Upstream Data does. We'll build grid Bitcoin mines. We're really well known in oil field. That's like call it our bread and butter. That's our main business, is off grid. So we'll build oil companies Bitcoin mines, and the thing is that oil companies are in a position to have very low cost power, but they have different costs that are maybe they have more downtime. For example, the gas might be lower quality or variable uptime based on different site requirements or site problems.
But are you not mining yourself?
We do.
Yeah.
This year we're doing more than we have in the past. So if you look at my company, I started Upstream Data in 2017. I have, aside from just getting people what I call like trial projects where I'll mine Bitcoin, give you all the data, all the revenue I earned on your site. I would do that to show them that this is not fake. Like you can make this money. And then we would end up turning that into sales. Like they would buy the units, and then we would just be a sale and service business behind it. This year, we are actually doing more self-mining, mainly because what I found is all the oil companies that we've orange pilled and are actually mining their own Bitcoin, which we've done really well at getting oil companies to do it direct. It's where they're self-mining Bitcoin. But what I find is after this last cycle crash, when you saw that hash price through the roof and then it dropped, guys were buying hardware from us or sourcing their own, like miners, and that miner value plummeted like 90% and sometimes more, but in that range of like 90% value. So there's a lot of shock from my own customers on how Bitcoin, the volatility shock. And so what I'm finding now is they still want to use our products, but I'm getting more traction with them where we are the miner and they own everything else. So like we'll sell them our hash generator skid, for example, which is an all-in-one natural gas Bitcoin mining unit. But they'll buy and own that, and we'll pay them a fixed price per power.
They don't want to be big Bitcoin miners. They just want you. They want to outsource it because they don't get it.
Yeah, the big oil companies, it's always been that way. They don't really want to be directly exposed to Bitcoin. But we actually have gotten a lot of big companies to self-mine Bitcoin.
Okay.
A lot of them I'm not allowed to mention because I'm under NDAs, but they're like usually smaller projects. Like they try it and they'll self-mine Bitcoin. It's actually on their books. But Upstream, one thing I've done to get them to do this is we will buy their Bitcoin off them every month at spot. So we have a small fee to take the volatility risk, but so they end up getting paid out cash, even though they're mining the Bitcoin. But then a lot of our customers are actually self-mining and they handle everything. Like we just build and sell them equipment, and then our mechanics might go service it. Our electricians might go service it. We do remote monitoring and stuff like that.
How big is the company now?
So we got about 40 employees.
Okay.
We have 2 facilities in Canada, so 2 manufacturing facilities. I've been slowly trying to expand into the U.S. I halted the speed at which I'm coming into the U.S. just because when the market crashed, like obviously sales slowed way down. So instead of like overstepping like our, adding overhead and stuff. Like I still run a very fundamentally basic business. Like I build and sell things, right? So I've slowed down my expansion plan, but hopefully this year I'll be physically in the US operating as well. But I probably won't be manufacturing to start in the US. We'll be shipping down to the US as we do now, but I need to have like physical services in the US because that's the hardest part of this off-grid thing. It actually is quite a lot of specialized work. And I find that a lot of our customers don't always plan for that. So when we're around, our customer success rate is through the roof. When we're not around and they have to use a third party or someone else, they don't actually know the equipment that well. It's a different story. So
okay, nothing in Europe?
Nothing in Europe yet, no. We've shipped a lot of product to Europe, but it's like our little home mining boxes, like or like little small scale stuff. There's a company, Skilling, out of
Ireland.
Skilling, I think that's how you say it. Yeah, they're awesome guys. I've been working with them. They're building like a form of our black box over there and selling it to their own like pig farmer customers and stuff like that.
Do you do anything with the heat that is extracted?
The heat reuse?
Yeah.
No.
I'll go with this, don't you?
No, and I'm not very. A lot of people will get mad at me for saying I'm not that bullish on the heat reuse thing, because mining heat is a low quality heat because it doesn't have a high temperature. You need a high temperature differential between the heat that you're using and the ambient air for it to be useful. So there's like, you do see it, there are cases, niche cases where people are using the heat at home, and that is actually viable if you have a high heating cost. Say in Alberta, I live in Calgary, we have natural gas heating, and I actually am just installing in-floor heating into my basement because it's all roughed in. I just have to get a heat exchanger and a pumping system. So that's ongoing, like basically when I get home. But I was thinking, well, I could actually just build a little like immersion rig or water-cooled rig and pump that heat through the floor. The problem is our electricity costs in Calgary are quite high. So I'd have to generate that heat through mining. And that alone isn't unit economic. Like I'd be paying more in electricity than I would making income. And my natural gas bill is so cheap, and like incremental gas usage is so cheap in Calgary because they just hit you on the distribution fees. Like my bill is all distribution fees. It's like I could double my gas use and my bill will barely go up because the gas rates are so cheap. So the home mining thing, like or the heat reuse thing, there are niche applications. But one thing, I've also said this a lot, like I build power plants, like micro power plants. These engines run way hotter than a Bitcoin mine. And we already use the heat all the time in the oil field. Like we'll run a glycol loop off the water pump, and we'll basically run coolant through a line, extend that, instead of it just cooling the engine and the radiator, we go wrap it around the piping and stuff like that, like the separator vessel, like whatever, the scrubber. And that's been in use for like 50, 100 years or however long engines in the oil field have been running. So we're already doing that. And then to do that, instead of doing it on that useful high differential temp engine, it doesn't make sense to do it off the Bitcoin mine because the Bitcoin mine is much lower heat and less actual heat. It's lower temperature and less heat because the engine produces like, say 30% engine efficiency, well, 70% of its heat wasted to the atmosphere or through cooling. And so I can just go take that high temp heat and use it. The Bitcoin heat is there, but like it's just a lower grade heat. So that's actually one, if you want to, I personally think if you want to see massive advancements in Bitcoin mining tech applied throughout industry, so using Bitcoin heat and also just Bitcoin load, like load shedding, through a whole new, like I've talked about this before and people always laugh at me. You could actually run Bitcoin mines in the transportation industry if the Bitcoin mines were light enough to justify the incremental fuel cost. For example, I'll give you two quick examples. Like one, if you had, most cars are internal combustion engines. Mm-hmm. If this is obviously not possible right now or ever, but if Bitcoin miners got hotter and hotter, could operate at hotter and hotter temps, you could reduce the size. Think about it, power density. The density of the computer would go down and down and down for the same load. You could then strap that to any engine that's out in the world in the transportation industry wasting energy on brakes, and you could brake the vehicle with Bitcoin mining, which is a really fantastic idea, but it's really probably never going to happen just because the physics behind semiconductors, like they need to get to like 600 degrees C to where they're so compact that you could strap it to a moving vehicle, because you then have to justify the extra fuel and carrying it around. There might be some niche applications of that today, because I was actually just looking at, I wrote about this a few years ago, like LNG vessels. So when you transport LNG, there's a boil off rate. And so the natural gas effectively, it's basically, it's super cooled, right? But it's always boiling off, and they try to use as much of that as fuel as they can, but they often install like secondary diesel power plants in those vessels. There's like different modes in which you can fuel these vessels, but there's one mode where it's all based on fuel. And you could have, the problem is though, if you have a big, say, steam turbine, like a natural gas boiler, which is what they have in these vessels, powering a steam turbine, you want to load that up. Else, if you have a very low load on a turbine, it's super inefficient and you're just like wasting a huge amount of fuel. But if you had a Bitcoin mine strapped to it, keeping it at, say, peak nominal load for peak efficiency, the incremental fuel to burn that you're losing anyway, like it's just boiling off. And the quality of that fuel, as the temperature rises, it's harder for the facilities that process it. They have to put more input costs. So anyway, without getting into too much weeds, it's there are actually applications for Bitcoin mining, in theory, like beyond stationary power generation, which is what we specialize in, which is like stationary power plants like gensets, or power plants themselves, like thermal power plants, or wind farms, or solar. It doesn't matter.
Yeah.
Yeah.
So the reason I'm asking is I've got a bit of a new football stadium at some point, and we have a problem for 2 to 3 months a year where pitches freeze. And the way the big teams use it, they run pipes under them.
Yeah.
And they run warm water through it, and it thaws it.
Yeah.
And in my fantasy world as the Bitcoin club, wouldn't it be cool if we had a rig of miners there and we were using that heat to thaw the pitch? It would just be such a cool thing to do.
Yeah.
But I expect it's logistically very expensive and cost prohibitive for a club our size, but I just know it would be such a cool thing to do.
Well, if you have to put the plumbing in, no matter what, whether it's like, so how are they heated normally? I'm assuming
normally
fuel like heating oil or like natural gas.
Well, at our level, they don't. You just have games that cancelled.
Oh, okay. Yeah.
And it's not until you get it probably in what,
like League One or League Two, maybe.
Yeah, like the professional leagues, they would build in under sort of heating.
It would just be from oil or gas or whatever.
Yeah.
Yeah. So they're either, depends on where it is, right? If you're like close to abundant hydro, it might all be electric boilers.
Yeah.
In which case you have an awesome case for it. Anywhere we have electric is your current source of heat, and that's always a great case to convert to Bitcoin. It is going to be more incremental money, but you're going to pay for that in the incremental hashing and revenue.
Yeah.
That's always a great unit cost, like economic case. But if you're using, say, fuel oil or like natural gas or some other heating method to boil that, to heat up that fluid, that's when it gets a little like you have to really look at the unit cost of the power plant. Well, it's always about the power plant.
Yeah, we would come off the grid.
Yeah.
I know that we would take off the grid, and electricity off the grid is expensive in the UK.
Well, for example, just like at my house, right? We have obviously grid connect like to power my home, but the heating comes from natural gas. So it just depends on where you are. If you're using heating if you're in Alberta, you're almost likely going to have natural gas boilers in a facility like that.
Right.
If you're in the UK, I don't know why.
Oh yeah, no, it's gas boilers as well.
Yeah.
Yeah, big gas boilers.
Yeah. So in that case, like if it's any kind of fuel, it's usually cheaper because you're also going to only turn it on when you need to. Like you're not going to run it during the summer. And so you're going to not have any fuel costs during that time, but you would have a constant, like you don't want to have the Bitcoin mine doing nothing the whole time.
There would be another issue as well in the noise would probably raise issues for planning.
Potentially, maybe you could do immersion, but that probably would just adds another layer of...
You wouldn't do air cooled in that setup. You would do either immersion or water cooling. I would do water cooling because it's just better in my opinion, but you would have no noise problem.
Huh. When we get to it, we'll talk because it'll be interesting.
I just do free consulting all the time. It doesn't matter.
So back to the fees going up. Is this ordinals?
I do think that's a big part of it. And as a miner, I love ordinals. I think it's great.
I haven't met a miner who doesn't like ordinals.
Yeah. So I also love controversy. I love like chiming in on anything controversial. The funny thing in Bitcoin, right? You have a dynamic between merchants. I just call it like the merchant miner dynamic. Merchants being people that use Bitcoin. Like we're all merchants. In fact, everyone that uses Bitcoin is a merchant. But then you also have a subset of merchants that are miners, and they're just here to, generate hashes and have a business. Well, the miners love fees. We want the highest fees possible. We want the highest block rewards possible. And, historically, the whole block size debate, a lot of it was based on, like getting bigger network effects, and in the end, you get more revenue. But so miners want fees. That's what makes us money. And then merchants don't want fees because that's congestion. So you have this awesome battle between these two like primary subsets of the economy. So I love fees generally, but I also use Bitcoin and I don't like that I have to have fees. So it's like always a fun dynamic. But ordinals, like the thing with ordinals is like I was trolling from day one. As soon as I heard about it, I started inscribing things. Like Nick, our good buddy Nick from Luxor.
Yeah.
He helped me figure it out. And I inscribed a massive JPEG of, I had AI make me art of Greta Thunberg holding a bowl of coal. And so I did it as a fun troll. But I think it's fun. Like it's like, because anything the Bitcoin network accepts as a transaction is a valid transaction.
Yeah.
And so in my view, I don't really care what you think about my transaction. That's your subjective view and your subjective value. And Bitcoin doesn't care, and nor do I. So if people want to inscribe the silliest things into Bitcoin, to me, it doesn't really matter. Now, what you do with that, if you're like pumping, dumping, and actually scamming, like I'm not into that. But like when you're actually just using Bitcoin the way you choose to use it, I think it's great. So
I haven't spent too much time looking at ordinals. I don't know. Are there like marketplaces where you can buy these JPEGs, NFTs, whatever?
I think there are. I haven't delved into it. Like I'm more in for it for the memes. Like I've inscribed a few things, but only just a couple. But otherwise, like I'm not an expert like CBS Spears or what's his name? Luxor, of course, like is big into it. They, if anything, they might have like seeded the whole thing with hyping it up. So I do think there's definitely clear correlation to like transaction fees spiking from all the ordinal inscriptions and BRC20 and all that stuff. But also, it also Bitcoin tends to have these cycles of pumps, even when ordinals weren't around, right? Inscriptions weren't like happening.
Look,
so it's always hard to know.
I like miners getting paid. I want miners to be the happiest people in Bitcoin. I want them to be getting paid, be happy, no fears. And so if ordinals are paying miners, I think it's great. Did we see it yesterday? There was like a whole Bitcoin of fees in one block, right?
Yeah, it's getting up that way.
Yeah.
Yeah, it's good to see. I mean, like, and people that are really into Lightning layer 2, like decentralized layer 2 scaling, they should be at least happy to see fees spike, because that's one of the primary drivers to those protocols, those layer protocols. Because if you have low fees on Bitcoin, there's really not a lot of reason to use second layer in a lot of cases. I don't want to like piss people off by saying that, but it's just true. If you don't have high fees or you don't have censorship happening on the base chain as a user, there's not like, I have no reason to use Lightning.
Well, no, so you do. Well, I do. It's the instantaneous nature of the purchase. So where I accept Bitcoin in my football club when people are paying, very occasionally they pay a base chain, and I can't give them their beer or their shirt until at least I've got like a confirmation. Yeah,
that is true.
Whereas
if you're worried about them actually scamming you,
yeah, I mean, but you just don't want to take that risk. I mean, I actually, I did have one where he did the transaction, and I just assumed it was done, and it didn't happen. And I lost those fees. And
it's true, yeah.
And it's so easy as I'll show you it. I'd have to.
The counter argument though, and this is like blasphemy, but custodians actually have a use in the market, and custodians, if I'm your custodian, which I'm not wanting to be, but like exchanges, and actually the biggest one that I think people always overlook is mining pools. Mining pools are a custodian of miners' Bitcoin, and they take away the variance risk. But a custodian is its own layer on top of Bitcoin, and you can have effectively, immediate transactions if you're willing to pay through a payment service, which competes directly with Lightning. So again, it really only matters. I always look at Lightning versus custodian model based on censorship. If you're worried about censorship because you're doing transactions that are being censored, or there's a major problem, that's where Lightning thrives. Like if I'm going to sell my house for Bitcoin, I'm not using a custodian. Like I'm using the base layer, and I'm waiting my confirmations, and the counterparty better pay a high fee, or else the deed's not getting signed. But there's always like different.
I don't understand it. What do you mean? I'm the custodian. You're doing a transaction through the custodian.
So I could be a PayPal of Bitcoin, where I'm basically, you deposit your Bitcoin in your PayPal account, and I'm just facilitating all the like millions of transactions.
Oh, and they just run their internal database.
Yeah, and then it settles. Like maybe you want to withdraw it once a year, but there's only one transaction on the base layer. It's a custodial layer, right? Versus a non-custodial layer, which has major trade-offs, such as getting scammed.
Yeah.
But there's a lot of actual reputable companies that don't scam you, or at least haven't. And I'm not advocating for custodial Bitcoin. What I'm saying is Lightning has to compete with the alternative, which is custodial Bitcoin, which for the average Joe can't really, this is not really fair to say because Lightning's still, call it nascent. But Lightning's not as easy to use as just a custodian. So an average Joe might choose a custodian over Lightning today if all they're doing is like maybe paying your monthly subscription fee or whatever it is, transaction you're having. And they're paying a custodian a fee for that service. But that's what a bank is, right? That's why the world went to banking. Instead of everyone holding physical gold, you pay a custodian and give you a note, because that's what a custodian does. They give you an IOU, which you're transacting with. As long as you can withdraw it, though, in theory, there's nothing wrong with that. It only becomes a problem when you get scammed, which is unfortunately how I'd say the majority of these custodians have operated in the past.
Well, there may actually be a necessity to have this type of scaling anyway, in that 8 billion people won't be controlling UTXOs.
I don't think they will.
It's virtually impossible for the network to support that many people, and also they won't be able to afford the fees. And so I've been wrestling with this for a while. I'm trying to get somebody to answer this for me, because we have a narrative that we have to say, not your keys, not your Bitcoin, be self-sovereign, operate a node. But there is a reality that as fees start to spike, there are people in the world who want to have Bitcoin, but they might be buying Bitcoin at $5 a time, $10 a time, $100 a time. They do not want to be paying high fees to move that Bitcoin. You don't want to buy $50 of Bitcoin and then be paying a $20 fee to move it, right? But if you could go to a central custodian and then you deposit your $20 with them, and you have a balance of $20 of Bitcoin, that's going to be a service that people will provide. Now, people might not like it. It is just the bank replacing pounds with dollars with Bitcoin. But I'm sure we can come up with a way of verifying their balances, some way of creating some trust in the system. And I know this is sacrilege to say.
Well, it is, but I agree with you completely, because if you look at the history of Bitcoin, it's based on the open protocol underlying it that always needs to be protected. People always should hold their own keys if they can, if they want to, but not everyone will. And so if you look at...
Or can.
And a lot of them, I mean, there's a few scams, and if you've been watching Bitcoin Twitter lately, like some really well-versed Bitcoiners losing all their Bitcoin. Like, if that's still happening, then clearly there's a need for a trusted custodian. And if you look at the two main markets in Bitcoin, like merchants and miners have scaled through pools. Very few companies are self-mining. Very, very few. They're all using a custodian. That's what a pool is, right? Like, because they have a pool wallet that they pay you out in. You're trusting that they're going to pay you. Now, you have some levels of managing that risk. Like, you don't accumulate a year's worth of Bitcoin mining on a pool before you get a payout. You might have a payout every day or every week, depending on your own personal preference.
Yeah.
But mining only scaled through pools. If you had no pools, that was the best invention in mining, was the pooling, like pooling servers, like Slush Pool, I think, is credited with inventing that. If you didn't have that, and everyone had to wait a huge variance period to get into a block because you have a low hash rate, like a lot of people wouldn't be able to afford to even enter the market because they wouldn't be able to bankroll that wait time. So pooling is actually custodial pooling. You can look at it like a mining pool is a custodian. They scaled Bitcoin mining, and that's just irrefutable. So I've always looked at it from that point of view. And if you look at the market, most of the market are not on Bitcoin Twitter or like Nostr or any of the other main, like Reddit, like any of the major forums that we all might subscribe to. They're just people that heard about it through their friends or through the news, and they got in through a custodian. So the Bitcoin price pump is a factor of the network effect, which has been enabled mostly by custodians. And it is absolutely like, I'm all about not your keys, not your coins myself, but that doesn't mean you discount how useful custodians are. And the more custodians there are and more optionality people have, the better, right? Because it's like layered scaling through a trust model versus a non-trust model. Non-trust model being layered, like not like decentralized layers.
Well, you can distribute your risk.
Yeah, you can distribute your risk. Yeah.
There will come a time where, look, I don't have a huge amount of Bitcoin, but I've got, I've stacked some.
Didn't you just talk about buying a stadium or something?
Well, yeah, that's not going to be with my money. But any of us, even with a small amount of Bitcoin, could have a meaningful amount of money in a decade because we don't know what will happen to the price, right? Yeah. And I don't want to self-custody all of it. I don't, because I'm then the single point of failure. Yeah. I want to distribute it. I want to have some managed, I just want to distribute my risk. I just want to know what the new model is for custodians, because what we don't want are custodians, which is just a company, certainly a company with no track record, no history, like some kind of startup where there is a CEO who can make some sketchy decisions and screw everybody. But the federated model that Liquid built, I thought was kind of interesting. So is there like this multi-institution federated model for
Fediment is like a federated community model.
Unchained are doing that as well.
Yeah, I'm thinking more like what Unchained is doing.
But they are doing the multi-institution custody.
Yeah, could you have 10 institutions globally, each with a key, and then they manage that pile of Bitcoin, and then people can go in and use that service, and they have a balance, which is part of that Bitcoin. But that Bitcoin balance is transparent, right? Is there something that can be done along those lines whereby you aren't allowing the incentives of an individual or the mistakes of an individual to rug them? It has to be down to
there needs to be more individual failures or something.
Yeah,
like the federated structure.
Yeah, because we know, because this not your keys, not your Bitcoin, be self-sovereign thing. Again, I agree with it. But not everyone's going to be able to do it. Some people will never own a UTXO, but will want Bitcoin. And so is that Bitcoin exposure? Is that Bitcoin? Is it just on Lightning where they're sharing somebody else's UTXO? There's got to be new models to scale to billions of people.
Well, my theory on how the model scales is reputation.
Yeah.
Because you can always try to rely on regulation, but regulation only goes so far, and it actually can really screw things up. It can create regulatory moats and prevent people from getting into the market. So I'm very against regulation. I do think, and obviously there's a certain level of regulation in a lot of industries that's absolutely required. But in terms of a free market, I prefer reputational based systems. So say on one extreme you have full custodianship, on the other extreme you have full decentralization. There's trade-offs with each, and you have sort of intermediary options like the federated model, which sort of has a mix of both. There's a little bit of custodian there, but maybe more of a shared risk. But I personally preach work with people in the Bitcoin space, work with people with reputation, number one. Okay, because reputation is the one thing you cannot fake. Okay, so for example,
and you don't want to lose.
If you scam someone if I go out and scam somebody in the Bitcoin space, or I build them a system that's poor quality, and I don't go out and fix it and help them fix it, my reputation will get trashed and my business will die. Mm-hmm. So I have to spend a lot of money making sure that my customers are successful. I've actually had to do that a lot because not all my products have been perfect over the years. So I've had to go in and fix problems. And I've told my staff when we're eating money doing this, I'm like, I have to do this. It doesn't matter because I have I have a personal reputation in the space. Our Upstream Data has I think, a really good reputation. I have to keep that really high so that I'll scale off that really well in the future. So, for example, like last week, just for fun, like we had a web store. We upgraded our web store. I put up an auction. People will send me Bitcoin and Upstream Data Bitcoin with no terms of real service, knowing that we'll deliver to them, right? Like, because we have a good reputation. The best in the Bitcoin mining space, the best names in the space are like that. Like Luxor's a great name. Kaboom Racks, say in the mining hardware market, they're one of the best names in the space. People will send them money knowing that their reputation will back the transaction. Whatever they say will happen, right? And I'd like to think Upstream's the same way. So when it comes to like even custodians, for example, like even me, and I think a lot of Bitcoiners out there are the same. Like you have family members that are you're custodying their Bitcoin, or you help them get the Bitcoin, and you're actually doing the custodial service for them, either directly, it's like literally in a wallet you control, or like you completely babysitted the whole thing for free. But like I have my sister, for example, like she bought a little Bitcoin through me, and I'm custodying it for her.
Yep.
What's wrong with that? There's nothing wrong with that. I might screw it up, but she trusts me not to steal from her, right? And that's a family thing. But like I would like to think, Peter, like if you had 100 Bitcoin and you just gave it to me for a week and said, just hold on to this, I'm going to give it all back to you. Even though 100 Bitcoin would very, very much tempt me, right? But you're going to get it all back because I value my reputation so much. I wouldn't want to lose that, even if I could scam you and get away with it scot-free, just because I wouldn't want to trash. My reputation to me is worth more than 100 Bitcoin.
Should we test this?
We should test this.
I wish I had 100 Bitcoin to give you. Do you know much about Luxor's new product? What's it called? I don't want to call it a yield
the hash
product.
Price
no,
forwards, like the
no, it's
it is basically a yield product.
Yeah, but they don't want to say yield.
It's basically a hedging program, right? Like you can forward buy hash price into the future.
No, it's not even that. It's you've used it. You explain it.
Yeah, so there are miners out there who want to borrow Bitcoin.
Yes, this is what I'm talking about.
And they're willing to pay a premium.
Yeah.
And so it sounds like a yield product. It sounds like the things that have blown up previously a little bit, but
I think it's just their hash price features. Like I don't want to.
Yeah.
We could call up Nick or something, but
we should.
I haven't used it yet, but I understand. What I understand about the product is they're basically, as a miner, miners are just like oil companies, right? Like we want some certainty in the future on what our revenue is going to be. Like one thing I can control if I'm a miner is I know that I have this much hash rate today, and I can maintain this into the future. So, but what I don't have control of is what's the future hash price. So I think the product is all about offering hedging to mining institutions where you can buy futures. It might be a 6-month future, lock in a hash price, which is going to be discounted based on today's spot price. Sort of like an oil futures, right?
I think it's used as part of it, but they're also, miners are wanting to borrow Bitcoin.
Like you've lent Bitcoin, haven't you?
Yeah, I've lent Bitcoin through it. So like Nick told me about it, and I was like, these products fill me with fear because of what's happened with the borrow and lending services. The likes of BlockFi. You talk about reputation, BlockFi is the shadow that lives with me because they were a sponsor. We worked with them for 3 years.
Yeah, I know you've gotten a lot of trash over that. Yeah.
And rightly so. People warned me, and I said, no, it's fine. I mean, I used BlockFi. I thought it was a good service. Anyway, we've covered all that. Go and listen to the Odell show. I've got on my knees and begged forgiveness. But like that shadow's come with me, right? But Nick tells me about this other product, and we talk about it on the show.
Hash derivative yield.
Yeah, hash derivative yield. And Danny was nervous about it.
I wouldn't use it.
Yeah, and so basically you can lend Bitcoin to a miner through Luxor, and you get a return.
Yeah.
And so Nick came to me and told me about it. I was like,
I think that return is based on the spread between. I don't want to. This is already out of my knowledge depth, like because I know they're offering where miners can buy the future hash price at a market discount today, but they lock it in, and there's a counterparty on the other side of that trade, which might be what you're talking about. So that
whatever it is, I don't fully understand the product.
I think the yield, though, I saw there was a bit of controversy about this, and I didn't get a chance to listen to it yet or listen to Luxor talk about it, but I think the yield is coming from the spread. It's not from not from traditional lending, like you're lending it to market and they're paying you back.
I think it's a different product.
No.
Oh, it could be.
Yeah.
No,
okay.
no,
Well, then I won't.
No. It is a peer-to-peer. I'd say peer-to-peer. No, it's a lending service where Luxor is the middleman, where someone wants to borrow Bitcoin.
Yeah.
And you can lend it, and you get a return. So there's all this PTSD about this because of what's happened previously with all the companies.
Well, using the term yield is not a good idea right now.
No, but like, we do have markets for borrowing and lending dollars, and you pay an interest rate on them. That's a reality of the world. We're always going to have this. So Nick told me about it, and the only reason I tried it and said I would give it a go is because I trust Nick.
Yeah.
And he has built a good reputation with Luxor, and I don't believe he's going to blow Luxor up. And everything he's built over the years,
Not intentionally.
not intentionally, but even I think Nick. I'm basically echoing your point of reputation. I trust Nick.
Yeah, and I think reputation, like I think they have a good reputation. I think a lot of it too is just time. You need to be around for a long time, trading, doing things in the market to build that rep. All the hype in the world to me doesn't give someone a rep. I want to see them survive and go through all the markets, and
But the additional thing to this is that they now need to build a product rep around this product.
It's a whole new product. Yeah.
And I think that the difference is they're not going to be lending 900 million to 3 Hours Capital using FTT or some shitcoin as collateral, right?
Yeah.
All those mistakes which blew up all those companies.
Yeah.
They're going to be structuring it differently, and but like it may not work. It may fail as a product.
Yeah, there's whatever the case is with their actual underlying unit economics of the product. Like in the end, there's always risk. So nothing's risk free. If the main thing is if their marketing is risk free yield, then I'd probably caution them against that. But aside from that, I think the market should be wise enough now to know that every product that any, call it Bitcoin, blockchain, crypto, business is offering. I think there's enough lessons now that have been learned that I've just sort of look at it like if people want to go speculate on some stupid NFT bullshit on Bitcoin because I'm not into the, like I don't really care for the aftermarket of it. I just like the fact that in inscriptions is valid data and all that stuff I mentioned. But if you want to go speculate on that, go for it. Like I don't care. Like it's the risks. Like there's been 10 years of people scamming. So people want to gamble. You want to go do that. To me, it's like don't market it wrong. Have good underlying fundamentals, and if you do screw it up, make sure you have a treasury to make your customers whole, and otherwise have fun.
Yeah. Well, so where I'm going with this is that the difference we will have in this new model, whereby some people believe in hyper-Bitcoinization. If they believe in that, then sovereign currencies go. That we have these new multi-institution custody solutions, which are basically the future of banks, is that we're eventually going to get to a point whereby you're going to have risk, and the risk is going to be different from the banks. I know with my bank, I'm protected up to £90,000 in a bank account, or 80,000. So the government will pay big back. You got the FDIC.
It's easy when they can just print more.
Well, yeah, and the FDIC has that here. We're going to move to a world where you're going to be things are going to be on trust, and the trust is going to be even more important. Like I don't have to. My trust level with the banks, they don't have to be too high because I know the government is the backstop for their mistakes.
Yeah.
But in this world, where there is no backstop, where there is no government to step in, there's no FDIC, then trust is going to become even more important. And so these models, we've got to test and put out these models. And in these models, there will be borrowing and lending services because people will want to borrow money to launch a business, to buy a house, to buy a car. We're going to have those markets.
Yeah. I'll let the market let it do its thing. I'm down with it.
We might be the lenders.
Could be. Yeah, I don't know if I'll get into that. I like just building things. It's a lot easier, a lot simpler.
So you said you're bearish despite having a blog about being bullish.
Bullish thoughts.
Yeah, bullish thoughts. But you're bearish. Me and Danny are on different ends of the spectrum right now. I don't know if
you're bearish.
I don't know if you were drunk. No, we're both bullish, but Danny's insanely bullish. Like we were talking about.
You're bought into the stock to flow model, Danny?
No, I'll come back to Mike.
Oh God, where is he at with that? Has he said it's back?
Oh God, I'm blocked. I've been blocked by him since 2019.
Really?
Because I was really not liking the stock to flow model when it came out.
I think it was popular at the time, but it deviated from it. Everyone said it failed, and my assumption is it comes back.
Oh my God!
Yeah, and it has a resurgence, and
I mean that's dead forever.
Can you get it up? I bet because he'll be talking about it.
Yeah,
but no. So we were talking about like those scenarios.
What was he called?
Plan B.
Oh yeah.
If Bitcoin goes to different prices, what are the things you might do? You know, what are the things, if Bitcoin goes to X, what are the things you might do? It's like, I just want to invest in my team. So I want to build a stadium.
That's
and so I was like,
make things.
We were talking about, I should make things.
Oh, you're giving me heartburn looking at this guy.
I know.
Oh, so
I'm very much not a fan of these models.
So no. Bitcoin 2012 stock flow model still works.
Yeah, of course he does.
I'm very proud that I'm not following him.
I mean, that RSI model does work. So where is he? Yeah.
I like how he's toned down on the colors.
Yeah, but look,
he's come back to reality.
Look, we're nearly. Yeah, look, that's the one. We're nearly back on the line. You know, you can.
Yeah, you can just keep adjusting the model.
No, I think the model hasn't adjusted.
Well, he has like a ton of different models at this point, so he'll just pick the one that has the best fit.
This is the one though, the traditional one that gets published. Look at the one out of Farrington.
There's a few things about the model that I've never liked, and I think, yeah, there you go.
God, I love Alan.
There you go.
Bitcoin value with vibes.
Yeah, yeah. The model, like the one thing with the stock to flow model, it's predicated on this concept of 4-year halving pumps.
Yeah.
And there's a lot of Bitcoiners believe in that. In fact, I'd say the majority of the market. Danny probably does. Like if you're so bullish, you probably
I don't believe it. Even what in this?
No, not necessarily the stock to flow model, but like the fact that Bitcoin pumps every 4 years.
Yeah, it does.
Halving. Well, you could say it does, but it's sort of like cherry picking in a few ways because it's actually had all these micro pumps in between. Mm-hmm. So like, yeah, it's had some big pumps, and you could say it sort of correlates to 4 years, but in between, there's been all these little micro pumps. I've always thought like early market, illiquid market, super illiquid market, it has all these little boom busts, and those boom bust cycles keep extending until we sort of hit like what people call the inflection point, at which point fiat really starts getting challenged and hyperinflates, in which it'll go back to short pump cycles within months. But then at that point, the dollar is like literally dying. So the problem with it too is like, again, I'm sort of unqualified. Maybe some better economists can speak to this, but like there's nothing perfectly predictable in the market. So I just don't like the concept that because it would make it so easy to invest in Bitcoin. You just dump it a couple years after the halving, and then buy it back buy it back lower, and then it pumps again through the cycle.
Yeah,
and the more people that trade that way, it actually affects the market, and the market corrects itself. So it doesn't, to me, there's no plausible explanation for why that would be. It defies all like true market economic like understanding. So maybe Bitcoin is just unique somehow just because it has a fixed supply. I don't really believe it's unique, and economically it's actually very similar to a lot of things. So I don't really buy it. But
well, last night Danny said to me, very casually, so when Bitcoin hits 500K this cycle, what are you going to do? I was like, what, 500K? It's not going to hit 500K. What are you on about? Are you fucking crazy?
I'm bullish as fuck. I think it's going to be a crazy year next year.
I hope so.
I think we're going to have Fed printing loads more money, rates going down.
I'm on record saying 300,000 by 2025.
Yeah, I'd buy that.
Yeah, but that was bearish. Like when I said that, it was like it's in a newspaper back home. It's like 2020. They interviewed me, and they're like, "Where do you think Bitcoin's going to go?" I'm like, "Well, I've always been known to be bearish, like just like negative, if you want to say, like on price."
Yeah.
So I'm like, well, I think it's gonna be like 300,000 by like 2025. Back then, people thought I was a lunatic because everyone was saying like 1 million by 2022 or like 2021. So I've just been. That's actually why I named my blog Bullish Thoughts, because I'm like, I actually do have a lot of positive thoughts. Like it's not. I was really known at the time to be ultra negative about these models. So
I do get carried away every time though. So I take it with a pinch of salt.
I hope so. Like I'm super bullish, but I'm planning a business around it. Like maybe a content business. You're probably quite sensitive to the price too. You probably generate a lot more. Well, revenue, like advertising, whatever forms of revenue you have, interest, like people tuning in based on bull market. For sure. So I have to think.
Our downloads chart looks like the Bitcoin chart.
Yeah. But I mean, as a business owner, you guys, like I'm assuming you also plan for the worst and you budget for the worst. So I'm always thinking about worst case.
Yes.
And that's sort of why I have a bearish mentality. Because I'm just thinking, well, it's, I'm planning for this negative, path, and I just want to make sure I'll survive. And it's all upside from there, right? So
yeah, I mean, like I'm like 150K. That's what I'm saying.
That's so bearish.
Yeah,
it's and I think, a little bearish.
Yeah, because if that's bearish, and that's our worst case, we're gonna have a great couple of years. So everything else on top of that's gravy.
I get bullish when I see network effect grow. Like the stuff I've never been to El Salvador, but you hear about actual true network effect growing there. If that's true, that's awesome. Like that truly is what drives Bitcoin price is network, like nodes, people on the network, not physically. It doesn't have to be Bitcoin nodes, but like just people in the network, right?
Yep.
So everything that drives network effect is what's making me bullish. And even if that's a custodial service like Binance, Banking of Africa, or whatever the hell they're doing.
Yeah.
Yes, I'm like, I would not recommend anyone use it. But like, I don't really know. But the fact that they're accessing more nodes, even through a layer, to me is a bullish thing. Even if those people end up learning really painful lessons in the end, they're connecting, call it, to the monster that is Bitcoin. So that's what makes me super bullish.
Well, similarly, I'm bullish because of the meat spaces, the PubKey. Because you had El Salvador, you got PubKey in New York. I don't know if you've been to it. It's brilliant.
Yeah, Thomas is. I haven't awesome been there yet. He's invited me, but
we've got our football club. There's now 4 Bitcoin football teams.
Oh yeah,
yeah. So there was like us, and now 3 more have announced in the last year. You've got the Commons in Austin. You've got Bitcoin Park. You've got and people are being inspired to do their own ones. The amount of meetups that are growing, podcasts. There's just so much action.
You guys are really exposed to the merchant market in Bitcoin. I'm really exposed to the mining energy market in Bitcoin, and I'm seeing. I don't get out and go to these kind of things maybe as much as you guys do, and probably most of your listeners. But I'm really well integrated into the energy side, and I know, like, even if I'm not doing business directly, I know the guys that are, and I'm hearing all the good things that are happening, and the network effect on the mining side. So again, contrasting the merchant side of the spectrum of the mining is enormous. Like we're seeing just continued exponential growth. Hash rate growth obviously is like spiking. It's up there on the hash rate index, but like it's all-time highs or just about there. And just seeing where my companies come from in 2017 to now with oil field adoption, it's like mind-blowing. Like the amount of oil companies, whether they're mining themselves or not, but they're contracting with third parties like us or others, it's unbelievable. And not just oil field, like you look anywhere, like the all the small, like gridless. I love that. Like I forget what country, but it's in Africa. Like they're doing.
They've got a site in Malawi.
Oh man,
they've got a site in Kenya.
Yeah,
like Kenya and Ghana.
I don't think they've got a site in Ghana.
Yeah, it's Kenya. We're
just
going out there.
Monetizing exit. Yeah, you should. That would be bad.
We're going in a couple of weeks.
Yeah, a few weeks.
Yeah, so they've done, I think, a wonderful job. And I mean, companies like them, Skilling, I mentioned them earlier, using pig manure and stuff, for biogas.
Yep.
Anywhere, what I see is like anywhere you have all this waste energy in the world that a lot of people have no idea about, and co-locating Bitcoin mines upstream at that waste, at the power gen, is like that trend is slowly going to explode, like become the norm. Like I think within about 10 years, I'd be disappointed if in 10 years, every power plant in like any free market, like any reasonably free market like the US, if they don't have a Bitcoin mine co-located very close by, I'd be very disappointed because all this surplus power that sometimes they're curtailing depending on what the power plant is.
Danny, look in the UK how much we're curtailing. It's ridiculous.
Well, anywhere you get
Tens
renewables,
of millions.
Yeah, anywhere you get hydro, wind, or solar, you'll have just generally a lot of curtailment due to how it's not generated on demand. That's just as everyone knows. But even like thermal power plants, like say you put, now there's rules around how you get permitted for power plants, but like a natural gas peaker plant that might get installed in say Texas. and it's a peaker just being it's offline most of the time. It comes online when the grid needs it. Well, sometimes permitting doesn't allow them to run continuous. Like in Canada, that's a problem in some provinces. Like you can't if you're qualified to be a peaker plant, you can run at like worse emissions and stuff just to help the grid when needed, but you're not allowed to run all day long otherwise. But if the regs like allowed them to just do whatever the market asked them to do, they could just peak and sell power to the grid whenever the prices were high, or they could just shift the load to the Bitcoin mine for the rest of the time if the rules like allowed them to do that, which sometimes they don't let them do that. But if you had every thermal or non-thermal power plant doing this, or at least allowed, or the market would allow them to decide to do it, like the regs were out of the way, you would have a much better electrical system, like in every jurisdiction that it might be.
It was 6.5 terawatts the curtailed this year.
Do we know what the value of that is?
Oh, well,
it's a lot.
I could pull out a pen and paper.
Yeah, it's a lot.
It's a lot.
Yeah,
it's a lot.
Yeah. The funny thing is, you could go to them and say, "Hey, by the way, if you just put this magic box here, just let it there, sit there, everything you're curtailing, just run it through here, and we'll give you some money." They'll be like, "Really?" Like, yeah. And then if they say, "What is it?" You say, "Well, we'll be mining Bitcoin." They'll be like, "Ooh."
That is the case.
I'd rather not have free money.
It also added, it says here, like $1 billion to consumer electricity prices.
Yeah.
£1 billion, sorry.
I just feel like we need to go back to the UK and go and fucking lobby them to do this.
Or just do it.
Yeah. It just
unfortunately, it's hard to just, it's... Because the regulators will squash your dreams. Like we have to deal with that a lot in Canada.
A lot of the generators would be private companies, though. Why would they get in the way?
There's all kinds of scenarios. Like say in Canada, this is like crazy, but they have carbon tax, right? So up until pretty much this year, carbon tax on venting and flaring of natural gas, like in an oil field, was exempt. You could just burn and piss away the gas and no penalties, just because they weren't considering Bitcoin really as part of a solution, even though we were, say, selling these systems for years at that point. But as soon as you like plumb that same gas that you're burning in a flare stack into a Bitcoin mine in Canada, you're now paying a carbon tax on it, even though you're reducing the carbon emissions because the regulations are so backward. That's how stupid it is in a lot of, that's like one extreme example of how bad regulation throttles like an efficient market. Because like when you're actually not flaring and you're generating revenue, which you can pay royalties on, which flares don't pay in Canada, like all these things that could be subsidizing the Canadian people, because that's like Alberta Energy, for example, puts a lot of money into our economy. The regs are throttling it because really bad red tape. Like it's bureaucrats, right? Like they cannot navigate, they cannot change the rules. They have too many misincentives to go do things, and they don't have enough like direct authority to make direct decisions. They have too much, committees and other things. I could just go on for days about the bad regs in the oil field, but you also get like what I was saying with peaker plants, like a natural gas peaker plant might get permitted to come online and save the grid when needed, and they get paid a lot of money because the grid prices are high at that time. But they might only be permitted to do this because like they're using cheaper generating sets or power plants that have a higher like NOx emissions, or say they're not as clean burning as a steady state, like fully permitted, fully regulated, like 24/7 power plant. That's like an example, but those power plants aren't allowed to compete with the other ones because they're only permitted to peak, and so they're not allowed to run a Bitcoin mine and then pay off their costs and then overall sell power cheaper to the grid. Like there's a lot of really bad regs.
I really upset one of our listeners recently. They wrote to me because I keep criticizing Canada. I was calling it China. And saying you've got a stupid prime minister and lots of stupid regulations everywhere, and he's destroying the country. That's what it feels like externally, and I upset somebody. But
you're right.
Yeah, no, I think I am right. No, I think
you're dead right.
Because the amount of things I see coming out of there, as in Canada printed like proportionally most money of all Western
Per
liberal
capita,
yeah,
I do believe that's true.
all Western liberal democracies. There's a massive wealth gap growing.
Yeah, I think our real estate market, when you like sift it down to per capita, I think Lynn Alden actually tweeted a bit about it. Like, so I don't follow this too much, but I think like we're in a bigger bubble real estate wise than like any of the Western world. It's sort of scary. And then we have the
But
carbon
you shouldn't,
tax.
because the size of the country and the population, you've got a lot of land there. You could be building properties.
Yeah, and it's not just we have. If you look at Canada, we are probably the most resource rich per capita country in the world.
Yeah.
And we should be filthy rich as a per person in Canada, but we're not. And it's because you say China. I also look at us. I think we're effectively a puppet of the United States. So I say this because I again, my world is mostly energy. Like I think most of my life is around energy, and so like we so far can only sell U.S. down to the States. Like we can't even sell it across our country because special interests financed by non-Canadian interests have blocked our pipelines, not permitted them to get in place. We literally have a pipeline going from Alberta to New Brunswick, and all they need to do is build a short extension, and we can reverse that pipeline and send oil to the east. But instead, the east is buying it from the U.S., which we're selling it to them in the west. So
That's
think about it: we're
ridiculous.
selling it to the west. They refine it, or they might not even do anything. Goes back up to the east, and they make a spread. That's more or less what's happening. We're finally getting pipelines off the west coast, but that'll probably get like delayed again, so we can sell to the world market through container ship or through big ships and stuff, cargo vessels. But why haven't we been doing that for 30 years? Because we're not a real nation. We're a bunch of puppets. That's the pessimistic view I have.
With a half Cuban prime minister.
Yeah, we're exactly. Justin Castro.
Yeah, Justin Castro. When is the? Oh God, I'm going to get another email from this guy. I apologize. I just disagree with you. When's the next election in Canada?
I think it's 2025.
I mean,
But it can be called at any time if there's like what do you call it, a non-confidence, or basically the Liberals in Canada. There's three main parties: the Liberals, NDP, and the Conservatives. I'm pretty sure that most of the country is on the side with the Conservatives, but
Pierre.
yeah. And currently, though, like the Liberals and the NDP have sort of joined forces, and they're basically making sure nothing in the country gets done, and the carbon tax stays in place, and everyone gets just bent over by the government. So we're all hoping that he comes out in 2025 when the scheduled election's coming. But I'm ultra bearish on Canada. Like I have no faith in my fellow Canadians. And I also don't have faith in our electoral system. I have no idea if it's actually corrupt or not.
Huh.
So,
Have you seen the video of Pierre with the apple?
oh yeah, yeah.
Did you see that?
I've not seen
Well,
that.
you've not seen this?
I don't think so.
Oh my God, I can never pronounce his surname. Polyev?
Poilievre. Yeah.
Just go onto Twitter and search Pierre Apple.
Okay.
I mean, he just speaks common sense. Like, I'm sure if I
Yeah.
really knew all his policies, there'll be things I agree and disagree on. But here we go. Turn this up. It's the fact he's eating apple. Yeah.
On the topic, I mean, in terms of your sort of strategy currently, you're obviously taking the populist pathway.
What does that mean?
Well, appealing to people's more emotional levels, I would guess. I mean,
What do you mean by that? Give me an example.
you tap very strong ideological language quite frequently.
Like what?
Left wing, this and that, right wing. I mean, it's that type
I
of
almost never
ideological
talk about.
spectrum.
I never really talk about left
But
or right.
anyways, a lot
I
of
don't
people
really believe in that.
Okay.
Always loaded
A lot of
questions
people
with these
would
guys.
say that you're simply taking a page out of the Donald Trump
Well,
book.
like which people would say that?
Well, I'm sure a great many Canadians, but
Like who?
I don't know who. But
Well, you're the one who asked the question, so
yeah.
you must know somebody.
okay, I'm sure there's some out there. But anyways, the point of this question is
What a legend.
I'm just going to make up a bunch of bullshit.
Yeah, and
but
he's
anyway,
he does it again. He says the Donald page out of the Donald Trump book. He's like, which page? Another bite of the apple. I mean, he's absolutely. I mean, I like him.
yeah, like you said, he's just more of a practical, common sense guy, and he just wants to come up with. He's actually a Bitcoiner. I don't know if you knew that.
No, I do, because he did a really good speech in your version of Parliament. So actually, your Parliament runs very similar to the British Parliament, where he did it all on inflation and explaining that it's a monetary phenomenon and how much money the government's printed and why there's massive inflation. And as he's doing this, people are trying to shut him up in your Parliament, and he does. He keeps going, and I like him. I think he speaks common sense, and he's not like crazy right wing.
He's practical, yeah.
He's practical.
And, they always have to navigate those sensitive topics, and he's done that really well. So I'm hopeful he gets in. I'm personally pessimistic on politicians, but if we're going to have one, I'm hoping this guy gets in. He is very pro-Bitcoin. He's spoken a lot with Rodolfo NBK from CoinKite.
Yeah.
I think you guys know him well.
Yeah.
And I think Rodolfo's actually educated him a bit on Bitcoin. And he's a sensible dude. So he actually is one of the few politicians not blaming someone else for inflation. Like saying this is our doing, like our deficit spending, all this stuff the government's doing, which is a breath of fresh air, really. So
out in the oil fields, this like success you had, can you talk about like how many sites you're on now?
So we've shipped. Okay, so I have a whole wide product range. So for what I call our industrial product line, which is not like the home mining stuff, we've shipped about somewhere between 350 and 400 packages.
Wow.
Quite a bit. They're not like massive power units. I've always focused on this like really difficult, high emissions, like high liability gas problem, which is like small venting and flaring sites. Just because the big sites usually more often than not justified pipelines. So it's less, like if you have an out with selling gas to a pipeline, I've always said do that. And we're going to go after the lower hanging fruit, like the really tough problems that justify them buying our equipment. But yeah, we've shipped over 350 for sure. We might be closer to 400. So they're anywhere between like 50 to 900 kilowatt per package.
I've seen I've been to a couple of the Giga sites where they do something similar, I imagine.
Yeah.
Yeah. So you must have a pretty well-rehearsed sales pitch for these people now. And is it becoming an easy sell, or has it always been an easy sell?
It was not an easy sell early days.
Okay.
Early days, at least for the first couple of years, like I felt like aside from a couple guys that would flare up on Twitter or something, most of the companies I spoke with, we were the first to ever talk to them. So they didn't even like we were, and I made this mistake back then because I'm an engineer. I'm not really a salesman. And so back then I was wasting time explaining how awesome Bitcoin was and like, this is like worth investing in. And I've learned a bit about sales since. And really, the funny thing is my business model really hasn't changed over the years. I think I've always had the same pitch. You either buy the equipment and self-mine, or you buy it and we'll buy your power kind of deal. Like that's the kind of deal we do. And we're focused on getting oil companies to buy it because they're the ones with the liability. Like we've never really done what you see a lot of my competition do, which is like we'll finance the whole operation and pay you for gas, which I don't like doing and I sort of refuse to do because their gas is a liability. So I'm not paying you for a liability. It's sort of my mentality. But yeah, what was your question?
It's a pretty refined sales pitch now. So is it got easier because you can say...
It's gotten way easier because...
We're on so many sites. Like we've done so many?
That's been a contributing factor. We have the reputation and like the deployment history, and my team is great, a great experience base. But credit to all the other people out there doing it and my competition. They've also done a lot of good work making good deployments, educating people. And now people will look to us as one quote, like reference us for one option. And we might not win it, like someone else might win it, like a competitor, but it's sort of like anything. The economy grows and that brings in more people, and then we just get more cold calls. And
so it's a matured industry now. Is it spoken about in kind of trade publications? Is everyone like, oh yeah, you should be doing this, and now you've got inbound?
I would say that I would go out and say any facilities or production engineers at oil companies that aren't even aware of this by now have been completely living under a rock.
Right.
Like not so much because like we've done so much great marketing. It's just that this has been around now. Yeah, like I'd say starting in 2020 was around the time where most of the companies I talked to had already heard about it. They heard about us, or they just thought about the idea. When I started in 2017 and 2018, it was really difficult to get people to even understand what the hell I was offering. But that's how fast the market has developed. So most Canadian and American oil and gas companies, someone in their companies have looked at this, evaluated it. They might not have gone forward with it, but it's on their radar as an option.
And sorry, there's so many things I want to know. So do you arrange the ASICs for them? Do you do everything?
We will do everything if they want us to. We have a whole different variety of customers who have different competencies. So it just depends on what they want.
But ASICs age, and so will they always be looking to upgrade their ASICs as well?
Well, actually, that's the worst part of any Bitcoin mining operation is that the ASICs depreciate incredibly fast and they're super volatile. And you can also get totally wrecked buying from the wrong vendors, either scammed or they're just broken out of the box or a number of problems. Everything else, though, upstream of the ASICs, like the power gen and that kind of thing, is more or less low risk. Like it's sort of well understood. But the ASICs and the enclosures, which we specialize in building the enclosures, that's the higher risk part of the deal in terms of just for the oil company, it's the most foreign aspect of it, like having them investing in computing, which often they don't want to do. Like they'll just invest in power gen because they know how to generate power. They do it all the time.
Is it a meaningful amount of the hash rate?
I would say it is meaningful. I haven't really thought about where it might be right now in terms of levels. It would still be on the low side of off-grid mining would be on the low side of the global hash rate for sure.
Okay.
I know Daniel Botten he talks a lot about landfill gas and stuff. He's put out some metrics on what he estimated. He sort of tried to figure it out based on some different companies, like public numbers and stuff. I can't remember what he put out, but I think it's going to grow though, because I think it'll grow. Hard to say where, but I think it'll continue to gain overall market share, like this off-grid mining.
And it does, obviously it makes everything more decentralized because we have had that big growth of these industrial scale mining sites, which obviously great for Bitcoin in some ways, but also there is a centralizing force there. It's a different risk profile for Bitcoin itself.
It's true. There's especially when China banned mining, everyone was at that time crying about why China's got all the hash power. This is terrible for Bitcoin and stuff. And it's funny because then a lot of it migrated to the U.S.
Now we're okay with it.
And it's sort of I don't know what the U.S. hash rate is now. Foundry is I think still the biggest pool. And then,
when you look at that dip on this chart from when China turned off,
look at that.
It's just nothing there.
Oh, it was huge. It was a huge percentage drop.
But it took 6 months to recover or something.
Yeah. That was a good time to be mining. But a lot of it's gone to the U.S. I don't know what the U.S. installed hash rate is overall, but it's very significant. So it's funny because it's sort of flipped to the U.S. So a lot of guys aren't really complaining about the U.S. dominating as they were with when it was the Chinese.
Well, it could turn out to be a geopolitical mistake of China.
For China.
Yeah.
Yeah, I'd imagine. But China, they had the Yangtze River, I think, was powering a ton of the Bitcoin mines because of all that hydro surplus. And then I think when the river died down in the dry season, a lot of it would migrate to other power plants across China. But I do think it was a bad mistake in a sense, but in another sense, you could argue the governments want to kill Bitcoin because it threatens their money, their golden goose. So it's hard, it's maybe not so black and white.
I'm still amazed we're here and Bitcoin hasn't been banned. It just still amazes me.
Yeah, it's sort of you could almost say it gets semi-banned here and there. There's in mining, plenty of jurisdictions that literally banned it, right? China, obviously, but Quebec, moratorium on it. Many jurisdictions say there's a state or a county in Colorado right now that's basically banning mining for oil field. Adams County, I have customers there, and they're not allowed to get permits. It's just bullshit for no reason, just because they don't like it. It's bad for the environment. That's what they say. So,
But it's literally doing the opposite thing.
yeah, but they don't care. These people, right? Like these ideologues or whatever they're called. Like they don't care about facts. They just whatever makes them feel good. So like that's unfortunately what that county has on their governing board is just a bunch of woke individuals that really anything that allows oil and gas to be profitable, they want to ban. That's just their mentality. Unfortunately for those customers, so they have to navigate that. But we've seen in mining, and now you see, Marathon got a lot of shit when they were. I think they might still be promoting it. They might have eased off, but they were promoting like OFAC compliant blocks, so like censoring blacklist transactions. There's another pool. I don't want to tease it because I think it's coming out soon, but there's a report coming out soon. So I don't want to spoil it because I'm not sure I'm allowed to, but there's another big pool that apparently is censoring OFAC, non-compliant transactions. And that might come out next week. So it'll be news in the space. But so I heard rumors about that. So you're seeing censorship on the base layer by mining pools already.
This won't be out before then, so can you name and shame?
Okay. Well, okay. You better not throw me under the bus.
No, we won't put it out unless it's been
I
out.
won't tell you who's researching who figured this out, but because I think they're publishing it. F2 pool.
Okay.
Yeah. Apparently they just proactively are doing this. Now, this isn't arguably. It's understandable. They're a business, and if you want to stay in business, you better comply with the government. Like if you want to do your thing.
Are they based? Where are they based?
F2 Pool is, I don't know if they're headquartered in China, but they're always been a Chinese pool.
Okay.
Yeah. Chun Li is the owner. He seems to just be traveling the world everywhere now. He's just a good dude, but he, they're a white market. I call it white market business, right? Like my business, I don't operate in the black market. I have to record all my transactions and make sure the government, if they want to audit me, I have to be prepared. Unfortunately. So, I would prefer not to have to do all this, but I don't want to be shut down. So if they come to me and said like, okay, you have to mine on an OFAC compliant pool, what am I going to say to them? No, I'm just going to shut down now. Like I'm just going to do what I'm told. It's because I'm in a white market business, unfortunately. But Bitcoin is resilient, and there's presumably a lot of the network won't comply with that. And just by not complying with that, you're going to get more money, because if you solo mine or mine on a non-compliant pool, you'll get paid more, because all those fees that they're not including in the other chain or other pools and the other blocks will go to you, and you'll get a premium. So that's actually the whole principle of how Bitcoin resists state censorship, is the fee premium. And it'd be interesting to see that, because you should be able to start seeing that by people like companies like mempool.space might start observing pools, and you should be able to see a long-term trend. Well, this pool average block reward is less than what it should have been.
They already do that. They do this health status on each block. So if it's not like the expected block, then it gets a lower health status.
Yeah.
Can we see any?
So that one was mined by F2 Pool.
These are all 100, but there you go. That one's a little lower. You definitely get them. Sometimes they'll go into the red. And
yeah.
Find a Binance. Can you find a Binance one, Danny? After what we were told the other day.
Binance Pool.
Yeah, because we were told Binance will batch their own transactions into the blocks they mine, and so they're not the most profitable ones, but they've run.
They almost have like an off-chain fee. Like you can almost say they have a value coming external from the block reward that justifies that.
Well, they want to like consolidate their own UTXOs, for example.
Okay, yeah. Well, even mempool, right? Like mempool.space, I believe, is partnered with Foundry, and they'll accelerate your transaction. So they'll basically pay Foundry off block reward, because you're basically paying Foundry to include you in a block, which is, I think, good. Like that's in the end, whatever, a mining business, that's what they do. They produce blocks. And if you want to sell services to do that, it makes sense to me.
So 1 Bitcoin in fees is a lot. So people listening, we're just looking at mempool space.
From a percent standpoint, yeah, because we're at 6.25 subsidy in the block reward. So
Wow.
1 fee. Slush Pool just hit a 2.5 Bitcoin block.
Wow.
Yeah, and if you go look back, like there's probably some chunky ones there. I think the mempool's cleared up a little bit, but
They're all over a Bitcoin in fees, though.
yeah. Yeah, so that's just generally, that's just inevitably, even at this current fee level, like
Wow,
just in a few more halvings, the fees will be the majority of the block, right? So
How much are you thinking about the halving?
I'm always excited for it because it's never good for the miners. Like it's literally just an instant massive drop in revenue. So a halving of the subsidy, which by then we'll see if fees are high, like it won't be a full halving of revenue, but I guess I would celebrate it like any Bitcoiner. It's just sort of a cool milestone.
Yeah.
It's a cool event. Like there's some cool halving parties I'm sure are going to be up this time. But I don't care about it because the hash price to me is the only thing that matters. Because the hash price will build in everything else, the Bitcoin price, the block reward, the difficulty. It's all built into hash price. So, when we were talking about hash price at the start, if hash price at $50 per peta hash per day, if that is the market floor, and any hash price under that, people have to shut off, the hash price will go self-regulate at that, whatever that threshold is, right? So I never think about fees. I never, one mistake I think a lot of miners have made, I've always at least tried to educate them away from doing this, is I don't ever predict Bitcoin price. Like when I'm forecasting, I don't care about Bitcoin price. I don't care about difficulty because not everyone, a lot of people over the years have been, when they're making their economic case, they're like, well, Bitcoin's going to go up 10% a year, and difficulty is going to go up 15% a year, and fees are going to go up this amount. And then they derive their revenue off that. Well, it's all built into hash price. So just forecast hash price. That's all you need to do. And this historical trend, like that you got on the screen, to me, like $50 is that, at least given current technology, like computing efficiency, is a reasonable floor. And if I can survive at $50, I'm willing to invest more in my business. If I can't survive at $50 per peta hash per day, I'd be looking at maybe selling and getting into making pizzas or something. Because frankly, if I can make more money selling pizzas and turning my profit into Bitcoin, why would I be Bitcoin mining and just losing money? It doesn't make sense.
How do you forward predict the hash price through a halving? What's been the historical precedent?
So if the halvings happen tomorrow,
yeah,
and ignore fees for a second because $1 fees, almost 20, we're almost at about 20% of the block reward is fees. Just ignore that, just for simple math. Well, hash price is going to get cut in half tomorrow. If halving happened tomorrow and we're ignoring fees, then my reward tomorrow will get cut in half.
But would it really? Because wouldn't a load of people then switch off?
Yes, they will. So ignoring what the market will do to respond, everyone's revenue is just going to get cut in half. But we all know if that happened literally tomorrow,
yeah,
there would be, even just algorithmically, a lot of Bitcoin mines would just shut off because a lot of people actually run their Bitcoin mines. And if they're either automatically shedding if hash price drops, that's one thing I'm promoting this week, and so I'll shill myself here.
Yeah, do it.
At this North American Blockchain Summit is we have our new load sync controller. So basically it's built for our load centers, which is just our fancy word for Bitcoin mine. It's sort of like a play on data center because Bitcoin mine is not a data center, so we call it a load center. Anyway, so it basically will take any kind of input and shed your mine for a variety of reasons. Like if hash price drops, it'll tell the whole thing to shut down if you tell it to, if that's your signal. If the market rates, say on ERCOT or something, flip down, you're doing load shedding based on the ERCOT load response protocol, it'll turn everything off to be compliant with that, which a lot of Texas miners are doing. If your generator that we built for you is having frequency problems, meaning a frequency is just proportional to the engine speed. So if the engine speed drops, because it's overloaded or like there's not enough gas going to it, it'll shed to save the engine, to keep the engine from going down. If the ambient temperature goes up or down and you have set points, it'll shed. Like it'll ramp up and down. So we call it load sync. So the load synchronizes with all these different factors. And a lot of Bitcoin mines, they might do it manually, or they might have something like our load sync controller in there, and it'll shed their entire operation if they hit call it break even revenue, where their costs and revenue, they're making no money. Most of them, I don't think, do that. I think a lot of them will, like they're watching it and they'll actually make a decision to shut down. But it depends on what your inputs are and what you're trying to achieve. Because some people are trying to save, say they want to underclock their computers when the ambient temperature hits 35 degrees C, because they just know that that's the level where they start to have overheating issues. Well, our load sync will just, it'll do that. So that's sort of what, when the hash price, a lot of the market will respond to hash price because that's their gross revenue. Okay. So they'll just shed or shut down, or it also depends on their contracts. They might have fixed contracts, or they might be paying it forward. So they have to keep paying it for the next few periods. So there's all kinds of factors. But
do you think there'll just be a period of kind of volatility in this, and then it will eventually level out back to a very similar price?
Very quickly, I think.
So it's almost like the hash price, the floor and the hash price is that's like the aggregate of the market.
It is, absolutely. Yeah. It's going to happen I think quicker than ever. Like we'll see it stabilize to whatever the new sustainable hash price is. I could see it still taking several months, because there's going to be like those scenarios where guys are already forward paid their hosting or their contracts and stuff like that. One thing I think you'll see in the future, say 10 years from now, my expectation is that most of the hash rate installed in the world will be offline, because like you'll have all these like installs that are, I hope, at power plants, like I said, and they're only going to come on when Bitcoin hash price is so high to justify them to come on. Because the more these computers keep commoditizing and getting cheaper over time, which is the trend, like cheaper per kilowatt and cheaper per hash, you should see them. You're going to see more and more just sitting idle, waiting to turn on. And so when you see spikes in hash price or spikes in fees, say Ordinals pumps all of a sudden in a month and doubles fees, you're going to see hash rate just come online, chew through those blocks, and then come offline very quickly. That's what I'm expecting when we have a very mature market. But that could be 10 years from now. It could be 20 years from now. I don't know.
The maturity of the market of mining is so cool. It's one of those things like if you ever got a chance to sit down with Satoshi and say, what do you make of what has come of this?
Yeah.
Because you started this out, people were mining from their computer. Look at what we have now.
Yeah, I sort of wonder if he or she or they or whatever, like I think every great inventor doesn't know the full scope of how their invention gets used. Yeah. So, and I do as much as anyone idolize his invention and what he did, or he, she, whatever. But I'd be surprised if this person knew that the application of the hardware side of this would trend the way it is, like going, like I believe it's going upstream to the power plants, and just being a sort of like a smart. I always sort of call them a smart load bank. Like instead of running dumb load banks that waste heat, they're running load centers that make them money. I think they probably figured it out as they saw the trend going, and they decided to leave Bitcoin. But and I hope they're still around. But I couldn't imagine at the time. Obviously they knew that big server farms might sprout up, like mining farms. But if they were able to extrapolate this back then to like this is actually going to really fix our energy system problems, I'd be blown away if they thought that far ahead, because that only became apparent like years into it, like once it started industrializing.
Some ways, it's one of the coolest things about Bitcoin is these unknown unknowns that you get out of it. This what we've got with the grid. What the is it Vespa? The people on the Vespine are doing, yeah. And I'm like, what are the other unknowns that are going to come? Like, what are the things that Bitcoin is? Because it's almost like the perfect economic system.
Yeah, I think it is.
Yeah. And so all the kind of benefits that derive from that. It blows my mind. I'm in total awe of what a protocol with essentially two economic rules of 21 million half cap and a halving every 4 years has managed to do
it's
to the
unbelievable.
world. It's like unbelievable.
It's still super in its infancy too. Like I like mining, especially like the industrial mining rigs, like these like Bitmain machines, Watts miner machines. Like they're getting, call it, closer to commoditization, but there's still a lot of advancements that can be made. Like one that you don't hear talked about a lot, but I sort of touched on it, was if the material science can improve semiconductors to run at hotter temps and maintain efficiency, there's so many new applications for it that would be unlocked today, and the current application base would be improved even further, like less cost to deploy the same load, like computing load. And that would open up a broader market in the existing market. Like some applications which aren't the lowest hanging fruit would start to like be easier to reach, right? If you want to think about it figuratively. But then like the really niche things, like putting it on say for example, in my industry, like flare gas mining, you don't really see a lot of guys. I haven't even heard of anyone doing it offshore on an offshore platform. There's reasons for that, but one of the biggest reasons is just the incremental cost to put that kind of iron out there is a lot, and the fruit is really high on the tree. Why are you going to pick that, right? But if you get the power density higher and the physical load space, the footprint's smaller, you actually start like these applications. They might still remain high on the tree, but we're getting closer to them, right? So the more. There's so much more to happen in like Bitcoin mining tech that we're only really starting to scratch the surface, I think. That's what I find exciting. That's why I'm like really motivated to keep our business like hopefully close to the leading edge of all the tech so we can, stay relevant over time.
What do you make of the whole integration of AI server? Like our sponsor Iris have been testing that. Have you looked into that? Do you find it interesting?
I've looked into it as lightly as probably you have.
Right.
So I'm I like seeing Bitcoin miners look into that and actually invest into that, because I like it because, well, I'm hyper focused on Bitcoin mining technology. I've had a few conversations where people were expressing interest in us, like, I don't know, doing this in off-grid. To me, there's a lot of reasons why I don't think it makes sense for our current business, but I want to just focus on one thing and hopefully do it the best. I want to be the best at it. And just over time, because I think the market's only going to get bigger and bigger, like, so that we're well positioned to grab a chunk of that market share. And so when I see big miners like Iris, they actually do seem like one of the better performing mining companies overall. I like that they're doing this for a selfish reason. They're going to get distracted by a different technology that I don't care about, and and that money and time and resources, and it's just also just the mind share is off the market I'm going after. So I love it. I'm like, please go ahead and shift all your resources to AI. And I actually wish them all the best. I just know that, say personally, with Upstream Data, myself as the guy directing the ship, I have nothing to add in the high performance computing space. I might be able to like integrate someone else's HPC like data center with like our product, but that's as far as I would go. Like I would try to help build them something, but so I do like seeing it though, just because it's like, please distract yourself so the hash price goes up while you're distracted.
Yeah. Well, listen, I ignored mining for probably my first 3-4 years of making this podcast and barely paid attention to it.
Everybody did, Peter.
I didn't understand it and it seemed kind of boring. It's the fact that it's this whole massive innovative industry now. I think it's weirdly exciting. I mean, you obviously find it exciting. You work in it, but it's kind of weirdly exciting because it's all these incremental benefits that we're getting from it. Just blow my mind.
I was always disappointed because like every conference I go to back when I started, it was all like, say, the big Bitcoin 2020, 2021, whatever. 2021 was like the first year that the Bitcoin Magazine conference
San Francisco.
really put some emphasis. It was actually, this was the Miami year, I think, or 2020.
2020, yeah.
Yeah. It was the first year I went where they actually had some mining focus. And it was finally, I was like, guys, like miners are actually the backbone of the whole system. Like, so like, it's about time you start giving us a voice. Like everybody in the industry, like a lot of people find it really boring. Like the coding, call it the merchants, you know, are not so much interested. Just like the miners, we don't give a shit about your merchant trade stuff. Like we just care about energy systems and stuff. So I just think it's great because you have this industrial dynamic, like people like me, that's all we care about. And then you got the merchant like development, you know, software dynamic around Bitcoin and the economic, you know, all the people interested in the economics too. But there's like different, call it classes in the industry, right? Like the economics, merchants, trade, payments, investing, you know, industrial. Yeah, you know, subclasses. So,
well, you get your own stages
cool.
now.
We get our own stages
conferences
now. Yeah, and it's all the same people.
Yeah. Well, I think it's fucking cool. We've done, what have we done, an hour and a half?
Yeah, hour 40 minutes.
Hour and 40 minutes. I think we could wrap it.
But it's hard to get through. I can't get through a half-hour pod. So.
Yeah. So, I mean, there are other things I would have told you about. We'll just load it up. We're going to be in Canada in January.
Are you?
Yes.
Where?
Definitely Ottawa.
Oh, yeah. I think you mentioned that. Yeah.
Definitely Ottawa.
What's the occasion? Is that the Canadian Bitcoin Conference?
No, I'm making a film.
Oh, cool.
Yeah.
About the truckers.
Yeah, going to revisit the trucker story.
Oh.
Yeah.
I'll look forward to that.
Yeah. So I'm going to go to Ottawa.
Are you going to go to like Alberta at all? Like there's a lot of the movement came from Alberta. Like
we almost certainly have to.
Yeah.
But I'm going to focus it on Ottawa because that's where it was. And I'm going to be there at the time where it started. So like when I planned to go in January, people were like, do you know how fucking cold it's going to be? I was like, yeah, but that's when it happened. So we need to be there when it happened.
That's going to be awesome. I look forward to that.
So I will go out to Alberta probably. I've only been there once. I'd love to go back. But yeah, so we'll be out there. Is that where you are in Alberta?
Yeah, Calgary.
Oh, great. I mean, I've done the drive from Calgary to Vancouver.
Okay.
Loved it.
Through the mountains.
Calgary is very nostalgic for British people.
Is it?
Yes, because Eddie the Eagle Edwards competed in the Winter Olympics there as a ski jumper.
Yeah.
And he actually is from Bedford, where I'm from.
Oh, okay.
Do you know who this dude is? Right?
Yeah, he was the one that sort of... Like,
he was terrible.
He was not trained or something?
No.
Or like he just trained on dry land?
Yeah. And he was terrible, but he did one huge jump. Like he blew everyone's mind.
He still came like 17th or something.
Yeah, It's our version of Cool Runnings. But yeah,
totally.
Almost certainly we'll get out there and we'll try and see you again because there's like always loads to talk to you about, man.
Yeah, I got lots of nonsense I could talk about. So anytime.
Where do you want to send people?
You can get some merch. I got this cool shirt on from my web store. Just go to upstreamdata.com.
All right,
check us out.
All right, cool. Good to see you, Steve.
Thank you, guys.